morning. We're going to present on waste management. My name is Tristan.
I'm Xiaoyan.
I'm Wendy.
I'm Jianwan.
I'm Riley.
I'm Alex.
Hi everyone. First, let's look at waste management's competitive environment. To analyze the industry, we find the market survey report in 1996, which is a forecast about trash disposal business in the next 5 years. In this page, we can discover that FTS estimates annual increase in the amount of waste is 2%, which means that they stay optimistic about the future. There is also a continuing shift away from municipal collection toward private collection. Private firms collected an estimated 43% of waste in 1996 and will increase to 55% in the year 2001. Private firms which collect solid waste currently send 43% of it to private landfills. By 2001, the amount will increase to 45%. As this forecast, the companies who own private landfills, such as Waste Management, were projected to significantly increase. Therefore, Waste Management imagined a glory future and set up a target with ambitions. FTS also predicted recycling may increase significantly from 8% to 11%. For Waste Management, increasing of recycling presents an opportunity for expansion. In 1997, Waste Management owned 15% of the market in the US, and USA Waste Services owned 5%. After the combination of those two companies in 1998, they controlled 20% of the market. So this is the whole picture of the trash disposal business environment in the late of 1990s.
Who was involved? Dean Bantuck is the Waste Management founder, chairman and CEO during the relevant period. Philip Rooney, president, COO, and director and CEO for a portion of the relevant period. James Koenig, executive vice president, CFO. Thomas Han, vice president, corporate controller and CEO. Herbert Guest, senior vice president, general counsel and secretary. Bruce Tobackson, vice president of the finance. What's the money of their taking? You can see from the chart, and the Bantuck is taking nearly 60.9 million, and Rooney take nearly 9.2 million. So that's a big money of their taking. Let's see the fourth triangle. The pressure they have received from company revenue was below anticipated. And the second one is the officer bonuses. Retirement benefits and stock options are based on their performance of the company. Opportunity, the management collusion, and the ability to override controls and manipulate Arthur Anderson. The rationalized factors. Environment set a tone of not accepting failure and achieving earnings targets by whatever means necessary. And they believe the future performance would offset the overstated earnings of the current periods.
Throughout the period of the fraud, 1992 through 1997, Waste Management was audited by Arthur Anderson. From the outset of the fraud, a strange tone was set because Waste Management's management actually capped the fees and then told the partners of the engagement for Arthur Anderson that those fees could be made up through special work. Regardless, every year, they would go to the management of Waste Management and propose adjusted journal entries because they did find and quantify most of the fraudulent practices. Every single year, these entries were declined, and nonetheless, Arthur Anderson did issue an unqualified audit opinion for all 6 years that the fraud took place. At one point, they did get together with Waste Management's management, put together a summary of action steps, which was 32 steps to correct the fraudulent practices that Waste Management had in place. The SEC in their report described this summary of action steps as more steps, committing more fraudulent steps to cover up past steps. We could see here in a comparison of their financial statements, each year that the fraud was going on, their originally reported pre-tax net income and then their restated pre-tax net income. You can see that the fraud was very, very significant by the percent that it was overstated, even covering up a $39 million net loss by reporting a $192 million net gain.
One way they committed fraud was they avoided depreciation expense. They did this by assigning unsupported useful lives to their garbage trucks. They inflated the salvage values. They had arbitrarily assigned salvage values to assets with no previous salvage value. Their understatement was grossly different compared to the industry. Cumulatively over the 5-year misstatement, it was $509 million worth of depreciation expense that they did not report. There were also other expenses they concealed through their fraud. They did this by a method called netting. They would net their one-time gains of assets maybe that they sold with operating expenses or prior period expenses that they had not yet reported. By using this method called netting, they effectively acknowledge that they used an improper method of accounting.
Some other ways that Waste Management was able to commit fraud was through the improper capitalization of many of their expenses. Waste Management was in the process of creating many new landfills. In the process of creating a landfill, it requires you to incur a large number of costs associated with the permits. Waste Management was capitalizing these costs. However, where they got in trouble with GAAP was when they started to, or when they continued to capitalize these costs if a landfill wasn't able to come to fruition and be built. These costs then should have been written off, but Waste Management decided that they would move these costs to an existing landfill, which they called basketing, but that was not in compliance with GAAP. Another way they continued the improper capitalization of expenses was bundling. Bundling was when a landfill that closed early and maybe still had unamortized costs associated with it, instead of writing those costs off like they should have, they would just move those costs over to an existing landfill as well. So these two methods were not in compliance with GAP's rule for capitalization, which, as you can see, is a cost can be capitalized if it provides economic benefits to be used or consumed in future operations. So many of those costs that I just described, they did not have any benefit in the future. Another method they used was net book value method for the interest on landfill construction costs. You can capitalize your construction costs up to the period of when the landfill goes into existence. Waste Management, however, decided they would continue to capitalize the cost even after the landfill was in existence. Therefore, they were not in compliance with GAAP. As you can see from this slide, Waste Management understated many of their expenses by large numbers. As Alex said, $509 million of depreciation expenses were understated. The capitalized interest was understated by $192 million. The permits that were improperly capitalized on the dead landfills was $173 million. And as you can see, there's many other areas where they were improperly capitalizing their assets. Even this other category that's just various different operating expenses that were should have been written off but were actually capitalized.
Then I would like to talk about fraud unveiled. The large amount of spent charges and the increased operating profit made investors skeptical about accounting data. As the representative of the institutional investors, Lens Fund and Soros Group launched a proxy battle. They required Waste Management to replace their executive officers. In order to explain certain abnormal terms, the new CEO began a comprehensive review of the company's formal accounting practice. In October 10, 1997, the company admitted that they have inflated pre-tax earnings by $1.7 billion. This is the largest restatement of corporate earnings at that time.